I want to talk about Nvidia tonight. We had all-time highs today, and a lot of people are throwing accusations around that Nvidia is a bubble, that it's overvalued. And, I just want to respond to those because we don't think that's true at all here at Punk Rock Traders. And we've had several successful trades on Nvidia, and our current trade of the week that's active on Nvidia went up today, and we think it's going to go up quite a bit into earnings. One of the things about the stock market that it is a recurring theme is that the majority of kurtosis, or the fatness of the tails of the distribution of prices of stocks, it occurs actually outside of market hours. That's because earnings occur outside of market hours. But something happens in the run-up to earnings. Implied volatility increases. So when we get ahead of earnings like a month or two and we buy options contracts that we think are going to go up with implied volatility, you can sometimes get gains that aren't even dependent on the catalyst. For example, I'll go into what happened to our last trade on Nvidia. But I want to start out with something that might seem a bit odd, and it's a Kelly Slater quote. You can see it right there. The reason I bring this up is because in big wave surfing, there's different rules. When you're surfing normally, you want to use a leash, and that keeps you attached to your board. However, in big wave surfing, this will drown you. I think this is a good metaphor for valuation. Once a company's in the $1 trillion club, different rules apply. And Nvidia is a huge $3 trillion company now with margins in the high 70s. That's incredible. And that's worthy of a high PE ratio. Before I go much further, I want to let you know that I have been covering Nvidia for a long time. I'm a top 10% financial blogger according to TipRanks, and one of my best calls over the last couple of years has been Nvidia. I got people in early, and I, very much believe in the company's value proposition as well as their competitive advantage, which is very endurable. Okay, so let's talk about it, right? A lot of people are going to tell you Nvidia is overvalued. And if you look here at this valuation scorecard, and this is a relative valuation scorecard, remember, when you're talking about valuation, all of the complexities you see fall under one of two umbrellas. Relative valuation, which is this. This is comparing Nvidia to other companies, or intrinsic valuation, which we'll discuss later in this presentation. And that's discounting Nvidia's cash flows into the future to get a current value for the security, or present value as it's called in the parlance of the discounted cash flow model. So as you can see, Nvidia is overvalued compared to a lot of its peers. Not all of them though. And that's an important distinction, right? There's Intel. Intel and Analog Devices are both comparably valued to Nvidia. And here's the thing, Intel is very much a worse company than Nvidia. We'll just leave it at that. We don't want to go too much into that. But the point is that the implied stock price for Nvidia is a lot lower when you base it on relative valuation. But here's the thing. This is a $3 trillion company, and look at its margins. You can see there that it is really just becoming a cash machine. Its products are in high demand. Jensen Huang described them as insane, the demand for the new Blackwell chip, and the initial manufacturing errors that may have caused a bit of a lackluster earnings report last time have passed. So I think that the company's really in a position to exceed expectations. You had Bank of America just come out with some very positive research on them today. And here's the fundamental truth about Nvidia. When you talk about people having things overvalued in terms of technology during the web boom, you had valuations getting ahead of earnings. And then you had a big crash when the earnings didn't catch up. For Nvidia, the problem is the opposite. You are having Wall Street analysts unable to keep up with the company's earnings. It is the opposite problem. Nvidia is not a bubble and it is not overvalued. I'll show you what I mean. This is Nvidia's valuation scorecard a few days ago, so it may have changed slightly, but it's relatively current. You can see that there's negative 62.5% implied upside. Now, that again, you're going to say, "Wow, just like the last relative valuation slide you showed me, Chris, this company is overvalued. How can you recommend me buying it?" Well, let me show you the same intrinsic value scorecard from February. Okay, it was negative 93.5%. And you can see that all of the DCFs below and the PE multiples, the EV to EBITDA multiples, and all of that, they were all implying a much worse valuation. So what does that mean? Even though it is still red, right? Because whenever a company is a darling of the market, the valuation is always going to be red with a discounted cash flow compared to peers, because it's fetching a premium for a reason, right? And I think there is no better modern example of Nvidia than fetching a premium for a reason. The point is here, this valuation scorecard from February is significantly worse, which means that it grew into its valuation and it continues to grow into its valuation. So that's a really important distinction. Even though it appears under or overvalued in the intrinsic value column, the momentum of change is positive. That's a very different story than a company that is not producing earnings in line with its valuation. One of the things that makes me positive on Nvidia is that we have had the highest number of S&P technology companies issuing positive EPS guidance since Q3 2021. This is a really big deal. We also have economic growth projected to be well over 3.4%, I believe was the last reading from Atlanta Nowcast. So well over 3%. That's a huge deal for the US economy, and that's roaring growth in some ways, especially relative to prior periods in our lifetime. So this is a major positive, and I think Nvidia is going to have a show-stopping earnings report this quarter. I just want to remind you, last time people said Nvidia was a bubble, and this is what happened to the stock. There was a kind of what we call a chart crime in the industry circulating around, comparing Nvidia to Cisco. And if you look at what happened, the people who went short Nvidia based on this chart, they got quite a drubbing, and they got brought out on stretchers, frankly. Okay, so I want to go into why Nvidia is one of the fundamentally strongest stocks in the market, okay? It doesn't get more fundamental than return on invested capital. This is the number that tells you what management is delivering to shareholders, right? This is one of the purest numbers in terms of how management is allocating shareholder capital. Are they getting a good return on that capital, or are they wasting it? That is one of the fundamental questions we have to ask as stock market investors. As you can see, when I put return on invested capital against return on equity, the two best companies by leaps and bounds are Nvidia and Home Depot. Okay, so that is not, I'm just telling you, that is not an overvalued company by this measure, right? This is a very fundamentally strong company, and this helps explain why the company has been able to rally so hard. It's just leaps and bounds in terms of what it's offering shareholders in terms of growth and return on invested capital. Let's take it and turn it to return on invested capital and superimpose that against return on assets. You can see here Nvidia has an even bigger lead, right? I mean, these are monster numbers for any company, let alone a company that is worth $3 trillion. Okay, I mean, it's really unheard of. You can see that Apple is way behind it, right? That this is a big deal. MasterCard, Apple, Eli Lilly, Home Depot, and Costco, these guys can't touch Nvidia on these fundamental metrics being compared. Okay, so our Nvidia trade idea, like I said, is doing very well as of today. We did a long strangle, which we also did last time on Nvidia, and we're feeling very good about where this trade ends up. I think there's still time to get in on it if you'd like to, and you'd have to be a subscriber to Punk Rock Traders. We don't give away our trades for free all the time. Every now and then we give away a freebie, but not all the time. I want to show you what happened with our trade last time on Nvidia. It's a very similar trade to what we're putting on this time. Well, first of all, let's discuss what the trade is. It's a long strangle trade, and you can see here, it's a risk-defined trade, right? So we buy a long call and a long put, or some variants of that, and this gives us a risk-defined profile, which is better than just being exposed long, right? Let's say if we're just exposed long to Nvidia and they miss earnings, then we're going to get killed. If we have a put on the other side, we might end up out of the trade all right. So this is what's called an implied volatility crush, and you can see that last time we recommended this trade on Nvidia, very similar to what we recommended this time, and it peaked out in performance at 145%, but then at earnings, because the earnings were lackluster, the options price collapsed. Now, I want to tell you the benefit of our trade, because even though the earnings collapsed, the call options we recommend, they appreciated so much that you would have been able to sell them and still get a free look at earnings. Right? So if you were a risk-averse investor, slightly risk-averse going into earnings, you could have really controlled your risk with the trade we gave you. You'll be able to do the same with the one we've given you this earnings season, and we're very confident that that this trade's going to be worthwhile. You know, what we're hoping happens is what happened with TSMC, right? This is our trade from TSMC, and they actually beat earnings and exceeded all expectations. We're hoping that Nvidia does this again, and the company certainly has a track record of doing so. So hopefully there's a better ending to the trade on Nvidia this time, even though we were able to define and control risk with the trade last time. Hopefully we're just so in the money that we're popping the champagne. All right, guys. Well, thank you so much for listening to me tonight. We're always pleased to have listeners that aren't subscribers with our Punk Rock Traders video content. And we really urge you to give our service a try. We've been offering some really great trades, and we'd like to see as many people as possible benefiting from them. So thank you so much for your time, and have a great evening.